Welcome to the Keiser Report. I'm Max Keiser. You know, patients in Syria are opting to be knocked unconscious with metal bars because there are no anesthetics. In the UK, the governor of the Bank of England is doing something similar, bashing the markets with a crowbar because there's no monetary policy in the Bank of England's toolbox which can put this bad debt to sleep fast enough. Libor fraud, gold fixed fraud, ISDA fixed fraud, and now Forex market fraud. Each fraud is a whack, bam, bash to the market, trying to defraud the market to save the market. Defraud the market to save the market. Defraud the market to save the market. Stacy.
Now, Max, that headline about Syria, where people are having their heads bashed in order to anesthetize themselves, seems as medieval and macabre to me as many of the headlines we read week in, week out here on the Keiser Report about what central bankers are doing and governments are doing and too big to fail banks are doing in order to save the market. You know, in Syria, the doctor says they're trying to save these patients as they bash their head in to operate on some organ. But here, I want to look at some of the grotesque results of this sort of, medieval sort of surgery they're doing. SEC said to probe whether Forex rigging distorted options. The U.S. Securities and Exchange Commission is investigating whether currency traders at the world's biggest banks distorted prices for options and exchange-traded funds by rigging benchmark foreign exchange rates, according to two people with knowledge of the matter. So derivatives, such as options, Max, account for 50% of the $5.3 trillion per day Forex market. We know Mark Carney here for the Bank of England, the governor of Bank of England, was in front of a committee of people with no real power for anything, but they questioned him about this Bank of England participation in the rigging.
Yes, it's true. It's true. Options rigging. Options rigging and related to the Forex market.
You were an options trader, by the way.
I was the third biggest options producer in the Shearson-Lehman-Hutton system of approximately 10,000 brokers. I think I did close to $1 million in business that year of just options trading, nothing but options trading. And I know the options business pretty well, and I can tell you that it's the choice of market manipulators is definitely the options market, because you get the biggest bang for your buck. You put an option trade on for a penny, 10 cents an option, and if you can manipulate the market, you're going to see that 10-cent option go to $1, $2, $3. We saw it before 9/11. Not to get too conspiratorial, but the airline stock options were trading like the planes had blown up already. Then when the planes blew up, oh my God, a lot of people on Wall Street made a lot of money.
Even in today, the present financial crisis, we've seen this thousands of times. We've seen this across Europe. We saw this on Greece, on the interest rate swaps on those markets. We've seen this all over the place. Now we're seeing it in the Forex currency markets, the trading on that, $5.3 trillion a day. And now many people look at this, and because it's like a fraction of a penny, it's like one Satoshi sort of thing that they're stealing from every single individual. But over the course of a day or a year, and by the way, this is a $1 quadrillion market. This is probably the biggest market out there. $5.3 trillion a day. That's $1 quadrillion a year. So any corporation with global operations has to hedge currencies using futures and swaps, said John Coffey, a securities law professor at Columbia University in New York. Quote, if the FX market is manipulated, it can create a loss that is passed on to the consumer and shareholders.
Yeah, well, this is another consequence of near 0% interest rates, because the cost of borrowing money to speculate in markets like the options market is zero, close to zero. And because you have a quadrillion dollar business, quadrillion dollar market, the global Forex market, and of course the derivatives market are a factor greater than that. So that's why the derivatives market is actually a bigger market than that. It's subject to rumors. Rumors can create volatility. And options are priced on volatility according to the options volatility pricing formula. That's the very basis of an option. So if you can create a rumor, you can create profits in the options market for very little money. Basically, you take down a bunch of options, but you don't give the account number. And then you either try to start a rumor or you just wait for the volatility to kick in. And you give the account number later. And if it's a loss, you give it to a corporate client that needs the loss for tax purposes. That's why companies like General Electric know exactly to the penny what their earnings are going to be every single quarter, way before the quarter ends, because they manipulate the earnings number using tricks like what we call look-back trades. And or if it's a profit, of course, then you can just give it to a buddy or give it to a client that is threatening to sue you or something like this, you know. So this is a fantastic market to be in.
So the central banks and the government have been anesthetizing the population, trying to calm them down, don't panic, keep shopping. This is the mantra we hear all the time, by bashing with a metal bar interest rates and a quantitative easing, trying to drive interest rates lower.
Well, they knocked the market unconscious.
They mark the market unconscious. There's no accurate price signal. It's dead.
That's what quantitative easing is. It's a big lead pipe to the skull.
That's what it is. In the individual bankers themselves at Deutsche Bank, Barclays, Lloyd's, JP Morgan, Goldman Sachs, we're seeing a Clockwork Orange-like situation. These are guys going around bashing droogs' heads in, you know, with metal bars right behind us, all over here, right in the city of London. And this is a trickle-down, you know, head basher.
They knock the market unconscious with the blunt instrument, the blunt force trauma of quantitative easing, which makes it manipulation easy, the cost of manipulation easy. It releases like Ghostbusters, to use another movie metaphor beyond Clockwork Orange. How about Ghostbusters? You know, when they open up the little Ghostbuster container and they let out the goblins and the ghouls and the ghosts, and they come, the giant marshmallow man, he comes, that's Jamie Dimon, he comes stalking around, you know, scaring everybody. That's what happens when you keep interest rates too low. It lets the Ghostbusters of financial fraud out into the financial sphere, and people like Warren Buffett get fat, you know, trading on inside information all day. Hello, I'm Warren Buffett, I trade on inside information. PIMCO, you know, these guys are at each other's throat now. Aaron L. Iron, or whatever his frickin' name is, and Bill Gross are you know, at each other's throat, because their job is essentially no job. Their job is to just front run the central banks with all that free money that's being printed, a couple of drama queens, and for what, 6% over 10 years? You know, Madoff did twice that using the same market manipulation.
But here we have, again, let's use this analogy that we've been using for the show, and that is here in Syria, allegedly there's some people who prefer to have their head bashed in because they've been bashed in on the battlefield by some bad guy. Here we have a situation where everybody, the governor of the Central Bank of England, the chancellor, the head of the Fed, all of the bankers, everybody has a metal bar in their hand and is bashing people. Now, some say they're doing it to help the patient. Others may be doing it, just jumping in on the bashing, and actually are pilfering the patient.
You alluded to something in the teleprompting intro there, that we're defrauding the market to save the market. And this is exactly what they tell folks. This is what Hank Paulson says to Congress. We're going to destroy this market to save the market. Remember, famously, America and Vietnam, we need to destroy the village to save the village. You know, so this is they need to defraud the market to save the market. They need to commit market manipulation to save the market from market manipulation. It's complete doublespeak, and low interest rates are the root of this. And the victims, of course, are anybody who wants a decent job with a decent wage, or anyone who's trying to save money. Those people are being victimized. Those people are being carried out on a stretcher. Those are the patients getting whacked over the head with a steel pipe from the central bankers down at the hospital because they can't afford heroin anymore, because the price of heroin has gone up too high, thanks to quantitative easing, driving the price of all stuff up, up, up. It's inflation, it's stealth inflation. You don't understand it, you don't hear it, don't know about it, because you're high on being knocked out with a steel pipe by Janet Yellen, who's down there with a big pipe looking around. She's not smoking the pipe, no, she's using it to crack people's skulls.
Exactly. Now, you mentioned that incomes are declining. Now, the productivity gains here are declining. You know, this is an important ingredient to any growing economy.
Because they're unconscious. Okay, the productivity gains were up for a while because people were working more for less. And the government says that's a productivity gain. Then, oh, yeah, well, our wages are down, but putting the same hours in. Oh, well, that's productivity gain. Until you're dead or unconscious or on heroin, then they say you're not being productive anymore. Oh, off to prison.
Well, what I'm trying to say here, let me read this headline first before you jump in again. The hard truth is that the economy is recovering, but productivity isn't. The important thing is we know the peasants, we know they have nothing, we know their wages have been cut, we know their austerity has been pushed on them. But there are certain industries that are protected, and this article points this out, is that in the UK, it's finance. So these guys keep on being thrown huge quantities of money while they're bashing people's heads in with ISDA fix, Libor fix, gold fix, and now the Forex market rigging. So they're bashing people's head in and they keep on getting paid more. So they're saying in London, the major banks are struggling to wean themselves off casino trading, even though the returns are tiny compared to the vast amount of capital needed just to sit at the gambling tables of the derivatives market. So they're talking about this notion of having to throw more and more money, the Red Queen syndrome, throwing more and more money into whether it's North Sea oil or here, this is the finance sector is throwing more and more money, paying them bigger and bigger bonuses. Barclays just paid huge bonuses because they said they need to keep these people because they might possibly one day earn some profit for them.
Right. Well, the key being that they don't take any risk. Okay, their returns are less in the financial sector, and they're crying about it. But remember, they take no risk. All risks are underwritten by the government. All rewards are taken by the banksters. So they're crying over the fact that their rent-seeking activities, their extortion from the savers and from workers is not paying off like it used to because a lot of the workers are dying.
Here, the mayor will argue that he's like working for the finance. We need bankers. We need more of these bankers. So let's look at the exact quote from Barclays, what they're saying. Barclays is a case in point. Last month, Chief Executive Anthony Jenkins was caught throwing millions of pounds at his traders to keep them from defecate.
Now, you're not going to stop them from defecating because even Anthony Jenkins, who's a classy guy with a fancy suit, who was brought in to brush up and airbrush Barclays' public relations by throwing out the bum that was in there before Bob Diamond, who's now out, pillaging Africa. They're still going to defecate, Bob. You can't sew it up so that they're just out there on the desk all day raping and pillaging the financial markets and the Forex because there's no law, there's no rules. Sometimes it's a productivity loss, I know, Bob, but sometimes your traders got to defecate. Sometimes they got to urinate. Sometimes they got to eat. They will shove something down their gob into their pie hole because you're going to lose a penny there, Jenkins, buddy. You're going to lose a penny. So you can't go to the yacht club this weekend and tell everybody how much you exploited your workers by giving them free money so that they toil all day long in the cyber virtual fraud farms, turning over derivatives 500,000 clicks per second so you can freaking go out there to the Royal Ascot Ball and hump your horse or whatever it is you do, Jenkins. Whatever. It's disgusting. We don't like it. Nobody likes it. Do us all a favor and freaking resign.
I meant to say defecting.
Well, thanks. Stay tuned for the second half. A whole lot more.
I wonder if you believe that the military still has a special role to play in the affairs of the Arab countries, especially after the Arab Spring.
I really don't think that this notion of Arab Spring, which was born later on, and that to me, it is a language that is inherited from the Cold War. It has more to do with the history of East and West confrontation, with the Prague Spring that the Western media have developed, that with the Arab and Muslim civilization.
Reporting from Tripoli, Syria, China, Germany, Korea, Amini Sinawe, and Washington.
I wasn't a stable person. It puts everything in balance for me. Letting go of those identities for me is important. Part of it is protecting my parents. Somebody they would make a brother to, but then if they really knew your story, they'd kill you. There's me before. Crazy, huh?
Hello, it's nice to meet you. My name is Gina. What's your name?
My name is Jeffrey.
Welcome back to the Keiser Report. Time now to turn to Kyle Torpey, an independent journalist who writes about Bitcoin. Kyle, welcome to the Keiser Report.
It's great to be here, Max.
All right, Kyle, first I want to ask you about the emergence of sovereign altcoins. We've interviewed the guy behind Maza Coin for the Lakota Nation. Now there's Aurora Coin for Iceland. Tell us about it.
Sure. So basically, Aurora Coin is a 50% pre-mined coin for all the citizens of Iceland. And basically, they have a national database, which would normally seem like a bad thing for any country. But in this situation, they could actually use it for a good thing in getting a fair pre-mine for a new altcoin.
All right, let's talk about Iceland for a second, because, of course, they were just coming out of a financial catastrophe going back to 2008. The krona collapsed, the banking system collapsed, and it seems like having a sovereign altcoin or cryptocurrency is perfect for a country like Iceland. Plus, they get all the geothermal energy they could ever hope for to mine these cryptocurrencies. It seems like a match made in heaven. What do you think?
I think the idea is, it's a good idea, but I'm not sure if this was the best execution of it. The only real problem I have is that they actually allowed mining to happen before the people of Iceland were able to redeem their Aurora coins. So basically, we saw a huge uptick in the price. I think it almost reached $1 billion a few weeks ago on the market cap. But like once we have the people of Iceland redeeming some of their Aurora coins, then we could see the price go down, because they have the option basically of taking 33 or around 33 Aurora coins or trading them in right away for cash. So you're basically putting the hands of the market of that coin in people who may not exactly be very interested in cryptocurrency.
All right, let's step back for a second and talk about altcoins in general, because you had the creation of Bitcoin back in the 2009 period. It's a cryptocurrency. And then we've seen now altcoins, which are also cryptocurrencies. They're similar to Bitcoin. They have variations, as you mentioned. There's a pre-mining going on. So why do we have these altcoins to begin with? What is the purpose of them?
Well, I don't want to generalize all altcoins, but basically I think a lot of them are basically pump and dumps. So you have a lot of altcoins that are basically just the same exact thing as Bitcoin, but they'll change a few things. They'll change like the confirmation time, make it a bit shorter. They'll change the total number of coins that'll ever exist for that altcoin. So there are a few projects that are a lot more interesting than some of like the altcoins that don't really change anything. Like you got Mastercoin, you got Ethereum, you got some other projects like Next. They're doing it's all proof of stake, Peercoin. So there's a few that actually do try something new and give people something new in the cryptocurrency world. But for the majority of them are, I don't want to say worthless, but not really worth anyone's time looking at.
All right, if you look at the Bitcoin market, it's about $7 or $8 billion. You mentioned that Aurora Coin almost got to $1 billion. You got Litecoin is up near that $1 billion market cap. Ripple is another variation on this. It's over or close to $1 billion. All in all, the entire cryptocurrency universe is about, let's call it $9 or $10 billion. This is still compared to, when you compare it to the fiat currency universe, it's an extremely small universe all together. So these altcoins, some will survive, some won't survive, but it's basically a competition, right? Some will do well, some won't do well. Within this alternative currency market, which is sorely needed, let me ask you this. How would you put the cryptocurrencies versus fiat currencies? Is in your view, is there a need for a cryptocurrency overall, whether it's Bitcoin, Litecoin, these other cryptocurrencies? How do you see that kind of the big picture?
So I think there's huge advantages of cryptocurrency over fiat currency or even gold. For the main advantage is that you don't have a central bank controlling the money supply. So all of these different cryptocurrencies are basically private forms of currency, like we had in the United States before the different central banks came into play. So it's something that Friedrich Hayek used to talk about a lot, and Ron Paul talks about a lot, and Rand Paul sometimes these days, when you have this idea of competing currencies to find out which type of currency people actually want to use. So like basically the the current system we have with fiat currencies, you basically give a monopoly on money, a monopoly on setting interest rates, which is never good in any kind of market.
Right. So you have the free market, which is preferred over a command and control market, which is what you see with fiat currencies. I want to talk to you about what's going on with MtGox. You know, MtGox a few years ago was the #1 exchange where people can buy crypto in exchange for their fiat currencies. It's that place, the interface between fiat world and crypto world. Of course, it famously has collapsed. Now there's $100 million allegedly from MtGox or controlled by MtGox moving around. And of course, because of the blockchain is transparent, people can see this like a rat going through a snake. They can actually see this block of money. Maybe it's from MtGox, maybe it's not. I know you are very close to this entire crypto world. What is going on here?
Well, I think even for the people who talk to Mark a lot behind the scenes, no one really knows what happened. Either they got hacked, either Mark stole the coins himself, which is something that people have been talking about a lot lately. But I mean, MtGox has been pretty irrelevant to most of the Bitcoin community since around April of 2013, when their trading engine couldn't handle the uptick in how many people wanted to buy Bitcoins or sell Bitcoins. So we saw that huge crash in the market when it went from like 250 to around 50 in April 2013. And that was completely caused by their inability to write the right kind of code to handle a trading engine platform. So I think basically MtGox is irrelevant to me. They were irrelevant to a lot of the Bitcoin community for a long time. And I'd really just like to start to move past MtGox entirely.
Yeah, well, when the Silk Road scandal hit, it seemed as though once that was behind the Bitcoin community, we saw more interest and greater price appreciation. It was getting rid of a bad apple. Let me ask you about the comments that were made recently by Nouriel Roubini, who's a institutional economist who likes to go on mainstream media. He talks about Bitcoin using these old tropes, saying it's a Ponzi scheme. He said it's not even a stable Ponzi scheme, etc. What are your thoughts there?
I definitely don't think it's a Ponzi scheme. I mean, it's completely free market. I mean, if you look at how it was invented, people just decided to start using it as money. And, you know, some people like to say it's not money. I saw Larry Kudlow keep saying that on CNBC. Every time Bitcoin comes up, he says Bitcoin is not money. But I mean, if people are using it as money, and you can call it whatever you want, but it is money to some people already. And I think the volatility has to come down at some point as you get, like you just said, with the Silk Road and MtGox situations. Once those are behind us, once there's regulatory clarity, I think those kind of things are the main things that are holding back, first of all, adoption, and second of all, price stability.
Right. Well, Larry Kudlow, as I understand it, is now axed from CNBC. His main criticism about Bitcoin not being money is that he, quote, said, quote, it lacked moneyness. So that was the extent of his analysis, even though Bitcoin does fulfill the 4 characteristics as outlined by Aristotle and those who understand what money is throughout the ages. Bitcoin certainly qualifies. Let's move on to the topic du jour, talking about the Newsweek piece that came out revealing allegedly the true Satoshi Nakamoto, the creator of Bitcoin. You tweeted to the Truth Eater, which is the handle for Leah McGrath Goodman, the writer of the piece in Newsweek. Truth Eater decided to go on CNBC to tell everyone the identity of a frail man with 1 million Bitcoins in case criminals didn't see the article. So are you saying that Bitcoin holders are vulnerable to kidnap and torture, essentially? What's going on here?
I'm just saying, when you put a picture of them, a picture of their house where they live, a picture of their car with their license plate, and you say, this person has 1 million Bitcoins, here's where they live, here's their car, here's all their information. I just think the way that story was handled was not too good. It didn't seem like they had any regard for Dorian Nakamoto's safety.
Now, you mentioned Ron Paul earlier, who has been a supporter of competitiveness in markets and free markets. And He also is a Ron Paul altcoin out there. And of course, he falls into the libertarian space. And a lot of folks in that space are starch constitutional advocates. And they, of course, as part of that would be free speech and the right of journalism and journalistic rights to write stories and do investigative journalism. So Leah McGrath Goodman, as an investigative journalist, she does a story, and this would seem within the overall free speech and right of a journalistic effort to do so, right? So, isn't that kind of protected under the Constitution for her to write a story like this?
Sure, I don't really have a problem with the story as a whole. I just think maybe the way that it was released, maybe perhaps securing Dorian Nakamoto's safety before it was released, maybe not releasing a story when you're basically saying we found Satoshi Nakamoto, and now it seems a lot of the facts aren't adding up, and he's obviously denying it completely. So I don't have a problem with free speech at all, obviously, or reporting. It's just there's a good bit of responsibility that comes along with that.
Yeah, it's interesting because the amount of money we're talking about here, whether it's 400 million or $1 billion worth of Bitcoin, there are roughly 600,000 people around the world or with net worths of $100 million or more. There are something like 2,500 billionaires. There are 16 to 20 million millionaires. So, I mean, although it sounds like a lot, $400 million, it's in the grand scope of things in this era of fiat money where, a 30-year-old named Mark Zuckerberg is worth $30 or $35 billion. Multi-hundred millionaires are a dime a dozen. You can't swing a dead cat in this town without hitting a multi-millionaire. It doesn't really qualify as all that unique, but your thoughts, and then we have to go.
Sure. So I think the difference is that basically he was living in a house with not much security. It seemed he was living basically a normal life. And he was also very sick. I believe he had cancer, and he also suffered from a stroke not long ago. So basically it was just a frail man who basically would have been guarding that much money without much security around him.
Okay, who happened to be named Satoshi Nakamoto. All right,
Yes.
Kyle, we're out of time. Thanks so much for being on the Keiser Report.
Thanks for having me, Max.
All right, and that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I'd like to thank our guest, Kyle Torpey. If you'd like to get in touch, tweet us at Keiser Report. Until next time, bye, y'all.